Her Excellency Dame Cecile La Grenade, Governor General of Grenada, Dr. the Right Honorable Keith Mitchell, Prime Minister of Grenada and incoming Chair of the Monetary Council, Honorable Gaston Brown, Member of the Monetary Council and Prime Minister of Antigua and Barbuda, Dr. the Right Honorable Timothy Harris, Member of the Monetary Council and Prime Minister of the Federation of St. Kitts and Nevis, Honorable Victor Banks, Member of the Monetary Council and Chief Minister of Anguilla, Honorable Donaldson Romeo, Member of the Monetary Council and Premier of Montserrat, Honorable Camilo Gonzalez, Member of the Monetary Council and Minister of Finance for St. Vincent and the Grenadines, Senator the Honorable Dr. Raymond, alternate member of the Monetary Council and Minister in the Ministry of Finance in St. Lucia, Mr. Timothy Antoine, the Governor of the Central Bank, other ministers of government of the Government of Grenada, parliamentarians, members of the Diplomatic Corps, Mr. Trevor Brathwaite, Deputy Governor, and other senior members of staff of the Central Bank, permanent secretaries and other senior government officials, members of the banking community, specially invited guests, distinguished ladies and gentlemen, good morning. On behalf of the Monetary Council, I join the Governor in welcoming everyone to the handing over ceremony of the Chairmanship of the Monetary Council. Today, I will hand over the Chairmanship to Dr. the Right Honorable Keith Mitchell, Council Member of Grenada. I almost said, the King of Grenada. When I assumed chairmanship of the Monetary Council, the global economy was showing signs of recovery, and growth projection for the ECCU was moderate. Alas, in 2017, the hurricane season was particularly hyperactive and destructive. The damage and loss inflicted by Hurricanes Irma and Maria are in excess of $2.5 billion. As a consequence of the devastation of some member states, namely Anguilla, Antigua and Barbuda, and the Commonwealth of Dominica, real economic growth in the ECCU for 2017 was revised downwards and is now estimated at 1.4%. We in Dominica are still early in the recovery stage. We remain relentless in our efforts to not merely build back better, but are resolute in our mission to see Dominica become the first climate-resilient country in the world. I believe this vision of resilience is shared by my colleagues as we position our countries to withstand and quickly rebound from various shocks that attend from time to time. You may recall in my speech as incoming chairman, I stressed that securing the future of our region demanded our commitment to nothing less than economic transformation, propelled by an appropriate infrastructure, a strategy, resolute implementation, and patience. I then identified three challenges facing our region, namely, 1, strengthening the stability of the financial sector. 2, addressing the deficiencies in the flow of credit to key economic drivers. And 3, enhancing long-term growth potential and competitiveness. Against that pronouncement, I am pleased that in October 2017, the ECCB's strategic plan under the theme, Transforming the Eastern Caribbean Currency Union Together, was launched. The strategic plan is an important tool to drive progress in the aforementioned areas. During the past year, the ECCU banking sector remained stable and resilient, supported by a strong and stable EC dollar. Our banking ratio averaged 97% over 2017-2018, well above the statutory requirement of 60%. In the banking system, the banks continued to be challenged with non-performing assets. As of March 2018, the non-performing loans ratio stood at 12%, well above the prudential maximum of 5%. Nevertheless, the system remained well capitalized, with a capital adequacy ratio of 21.1%, well above the 8% prudential benchmark. The bank continues to work with our financial institutions to implement mechanisms to lower that ratio. During my tenure, significant progress was made on several critical initiatives. In consultation with the banking industry, a review of the Banking Act 2015 was undertaken and amendments proposed. In February 2018, the Monetary Council approved these draft amendments, which we expect member countries to enact later this year. In March 2018, the ECCB introduced the Risk-Based Supervision, RBS, framework to licensed financial institutions at a joint meeting of commercial banks and non-bank financial institutions licensed under the Banking Act. The RBS framework moves away from a rules-based approach and focuses supervisory resources on activities that pose the greatest material risk to our financial institutions. This framework will be implemented fully from January 2019. At the 85th meeting of the Monetary Council held on 22nd July 2016, Council agreed to recommend to member governments that the legal responsibility for the anti-money laundering, counter-financing of terrorism, AML, CFT, supervision and regulation of financial institutions licensed under the Banking Act be transferred to the ECCB. Since then, the bank has engaged the Ministries of Finance and the Attorneys General in coordinating a comprehensive review of the AML CFT legislation in each member country, following which amendments have been prepared for passage in member countries. In addressing the deficiencies in the flow of credit to key economic drivers, our main areas of focus are the creation of the Eastern Caribbean Partial Credit Guarantee Corporation, acceleration of the process for operationalization of the Regional Credit Bureau, acceleration of legal reforms to support access to finance, and in Dominica's case, for example, we have established a private-public sector committee to address this matter. An evaluation of a proposed relaunch of the entry-level tier market of the ECSE SME market with the necessary level of support, and the enhancement of the legislative framework to support the establishment of collective investment schemes. Following public consultations throughout the ECCU, the Eastern Caribbean Partial Guarantee Corporation entered into force on 7th May 2018, and an inaugural Board of Directors was appointed. This corporation will provide partial guarantee to financial institutions on loans to small and medium-sized businesses, thereby increasing the access to credit for growth and job creation. With respect to the establishment of the Credit Bureau, the ECCB with the World Bank Group conducted public awareness education sessions for credit information providers and relevant public sector entities in our member countries. Following a request for proposals, 2 firms have been shortlisted by the Evaluation Committee. The Evaluation Committee, comprising 1 representative each from the ECCU Bankers Association, Credit Union Sector, OECS Bar Association, Business Community, and the ECCB, is expected to make a recommendation for an operator by September 2018. It is the Monetary Council's expectation that the selected operator would have the depth of experience as well as financial wherewithal to secure a license to operate in the ECCU. We wish to thank the World Bank Group and the First Initiative for the technical assistance received on the establishment of the Partial Credit Guarantee Corporation and Credit Bureau. I am pleased to note that in March of this year, the ECCB and the Barbados-based fintech company, Bit Inc., signed a memorandum of understanding to conduct a fintech pilot on blockchain technology in the Eastern Caribbean member countries. The pilot will focus on developing a secure, resilient digital payment and settlement platform with embedded AML CFT controls and the issuance of a digital EC currency. We look forward to the results of that pilot in due course. In February 2018, the second annual Growth and Resilience Dialogue with ECCU social partners and the OECS Commission was convened under the theme, Working Together to Raise Growth Levels and Build Resilience in the ECCU. The dialogue was aimed at, 1, concretizing the work done on the 4 principal thematic areas of the first growth dialogue. 2, examining the forging consensus on mitigating vulnerability in the financial sector markets in the context of de-risking. 3, revising policies for the development of climate-smart, sustainable national and regional infrastructure. And 4, building resilience through the development of our institutions and human resources. Following the second Growth and Resilience Dialogue, consultations in the member countries are underway to finalize an action plan that will be executed by national delivery units. In light of the human and financial costs of natural disasters, there is an urgent need to build resilience in the ECCU. To that end, I am encouraged that the Council will today be considering the bank's views on the establishment of a Growth and Resilience Fund owned by member countries and aimed at boosting growth and building resilience to climate change. Before I end, I wish to commend the bank on its financial outturn in the 2007-2018 financial year, having recorded a profit of $10.8 million, an increase of $4.4 million when compared to the previous year. I also wish to place on record my profound appreciation for the support received from my colleague council members, the ECCB Board of Directors, the Governor, management and staff of the ECCB during my tenure. And I also want to recognize publicly the sterling leadership of Mr. Timothy Antoine as the Governor of our bank. Colleague, council members, ladies and gentlemen, it is now my distinct pleasure to hand over the chairmanship of the ECCB Monetary Council to my esteemed colleague and friend, Dr. the Right Honorable Keith Mitchell. May God bless this beautiful country. Thank you very much.